Alrighty, welcome everybody. Thank you very much for being here tonight. I appreciate you spending this hour with me. It'll be about an hour. There's sound now, Aaron. Can you hear it? What a day in the market, huh? Let's see. For the recorder, today's date is, what is it? Tuesday, January 14, 2020. For those that don't know, this is Rick Sadler talking. So today, what I'd like to do tonight is we're going to talk about breakouts. Give me just a couple minutes maybe to go over the SPY a little bit, what I'm looking at the market and a couple things. And then, I'm going to look at a couple of breakout trades that I'm either looking at or been in or something. And then I just want to jump into any questions you guys have. They can be on anything, something about breakouts or anything like that. But I do want to go over breakouts. I'm not going to spend the whole time on it because really it's really simple, and you'll see. We'll just get in it here. Let me adjust my screen a little bit so I can see more what you guys are typing. Here we are. Before we get started here, there was a great question asked, and I had mentioned to him here, ask the question during Q&A. The more I've thought about it, the more I think that is a fantastic question. So I would like to read the question, and then I'd like to give the answer. One of our members, Max, M-A-C-K-S, he wrote, so being a new guy to the room, I've noticed everyone talks in terms of percent for either risk or reward. Is this an option thing, or is this a preferred term when talking about trades? I have an absolute answer for that, and I would love to share it. And the answer, Max, is there's traders in the room that trade with $1 million plus accounts, and there's traders in the room that maybe have $1,000. So if we started talking in terms of money, that just doesn't seem fair. But if we talk in terms of percent, then really that makes everybody equal. Everybody completely equal. Take Joe and Stu, Joe, Stu, and Gwen there. One person might have $1,000 account. Somebody might have a $50,000 account. Somebody might have $1 million account. And when we talk in terms of percent, it doesn't matter. It keeps everybody fair and square and equal. And that's the reason that I do. Is it an options thing? No, it's not. It's just a clean way to share without really giving anything personal away. A lot of people don't want to talk about their account, and I completely understand that. So it just keeps it very, very clean and equal. Okay, let's see. Where are we here? Well, here, I better get going, and then otherwise we're going to get carried away. And then please ask questions a little bit later here, okay? So here's the SPY, and I want to take a look at the 15-minute in the SPY. Here's how we close on the 15-minute chart. And let me get this. There we go. You can see we've got a nice big trend here, and then we started moving down. We have what could end up a bearish H pattern if we start coming through this low right here, because that's the most recent established low, recent to this low. We get through here, then we could see a run down a bit lower here. So I'm kind of watching that. We'll see how everything opens up tomorrow and the futures this evening, see how that goes. If we look at the daily chart, we're still trending up. The bulls have the game, and I think no matter who you talk to, everyone realizes that we're a bit overbought. The thing about being overbought is you can actually stay overbought a long time, and you can miss out on a lot of trades. And we can make excuses. Well, I'm not going to be in the market because we're due a pullback. I don't disagree with that at all. The thing of it is you miss out on a lot. I'm not suggesting everyone go out and trade. Not suggesting that at all. What I am just suggesting is try to keep our feelings out of it and just simply look at the chart. And right now the chart is still bullish. A little toppy, sure. It was toppy right here, but we ended up bullish. We were a little bit toppy over here, pulled back and ended up bullish. So we just want to watch what we're doing here, be a little careful. I do recognize, and I get nervous on candlesticks, signals, and patterns when I see them, and I get happy on some when I see them as well. And right now, we're still looking at a bearish engulf, which makes me a bit nervous. We are trending, the bulls are still winning, but the bears are trying to claw their way in there. We had a nice move yesterday that closed us up. Nothing to brag about, but it was up. And then today we closed below yesterday with a little doji up here. So it's like all chart patterns. You have moves that move up, and then we always come back a little bit of backfill. In every bullish trend, you're going to see this. And the question is, well, exactly how much are we going to pull back? And right now, I think we're looking pretty good. Pretty much anything above the blue line, I'm okay with. This blue line right here. And basically, that's just following the T line right up. Because I use the T line a lot for, are we going the right direction or are we not for my time frame? And below this little horizontal line, which that's just simply the breakdown of that bearish H pattern on the 15-minute chart, if we break through that, then I'm probably looking for about 2480. And then from there, we'll just kind of revisit the market and see how we're doing. So trade cautiously, trade very cautiously. That's what I think is the best thing to do. And remember that you don't have to trade. Remember that you can put cash is a position. That is very important to remember. Let's say Les just asks, so do you reduce position size or tighter stops? Maybe more than anything, reduce position size because my stops are already, my plan is my plan. That's one of the core. That's one of the core decisions I make when I make a plan for a trade. So if I go adjusting stops, that seems to me like I'm almost desperate and I have to trade. And I don't have to trade, not every day. So there might be days where I don't buy anything. There could be days I don't sell anything. And there could be days where I start unloading positions. Typically, I've been running 8, 9, 10 positions. And I may make that a little smaller if we start getting too toppy, and I may even move into some short trades. Like I'm currently holding diamond puts, but I may add more or add some shorts on. Karen's asking, does the positioning of the T-line bands hold any significance? Absolutely, absolutely. Right here. The T-line bands is to me, here, I'm going to get rid of this. T-line bands to me is if they're in the bands, we pretty much have a bullish scenario. There are those cases where it's not bullish. Now, I'm saying a bullish chart. I'm not saying it's a buy right now. I'm not saying that at all. I'm just saying that it's a bullish chart. Not just because if they're trending up, they're trending up, and that makes it bullish. So. And on the bands, if we pull back, say on the SPY, if we pull back inside here, above that red line, that's the lower band, that's just a minor pullback to me. That is, is that going to affect positions? Of course it is. But that is not the market caving in. That's not the market exploding, or it's not that at all. It's just a normal pullback. So as long as we stay above that red line, I'm pretty much okay with it. And that's the case with just about any chart as well. There are those cases, not so much, but kind of a blanket answer. That would be a blanket answer there. Keep stops when pre-market is very down. Keep stops when pre-market. I'm not sure what that means, Ron. Not sure what you're asking. No, this is the T-line bands right here. The green, the blue, and the red. Those are the T-line bands. Keep stops in place. You should actually keep stops in place at all times, not just part-time or pre-market or any time. You should keep stops in at all times. Okay, let's. Oh, one other chart I want to look at here real quick, and that is the T2122. You can see that we were running here downhill. Let me get my little arrow here. There we go. We were running downhill here, and then we started to pop back up, and now we're just kind of consolidating. We are near this warning zone. We're very close to it. So, and it's just a warning zone is all it is. That's all. Just because we reach this level or reach this level doesn't mean that we're overbought, and it doesn't mean, well, let me rephrase that. Yes, we are overbought. Yes, we are oversold, but it doesn't mean we have those turnarounds. We still want to look for price action in a chart, the chart you're in or the chart you're looking at, and then follow our rules that we have in place. So I just want to point that out. That's one that I tend to look at times. Does TC2000 have dotted line plot? You can make it on there. That's what this is, TC2000. Thank you, Warden Brothers, for allowing me to show this. But yeah, it does that. Okay, let's talk about some breakouts here. And first of all, I want to point out that there's a breakout can be a chart that that has been trending up, and then it pulls back, and maybe that's this is the breakout point right here, right in there, and then a breakout can be right here when we're up like this, and a breakout can also be right in here like that. So this is a rounded bottom breakout, or this is what we call a rounded bottom breakout. The strategy, it's breaking out over the 50-day simple. But even without the 50-day simple up here, I don't have that up here at all. You can look at that price action, and you can see that we've broken out. That line was a little bit unfair. There we go. That's where I meant to put it. So we've had this breakout. So how I think finding these are important. I use a piece of software, and it's called Live Trading Alerts. This is what it looks like, and this is how I find them. I get people ask this all the time. Email me, ask me on YouTube and Twitter. I get Twitter comments, people asking, and this is how I find these sort of things. And you can see VG was alerting today, and it also alerted earlier. Let me come over here to my rounded bottom breakout chart right here. It was alerting almost. I've got it set up so that I might see stocks that are so just all close right up in here, and then today it broke out and started alerting. And we were in this. There were several people already in this, so doing well with it today on this. So what I want to look at is the breakout here. So let's go back to this chart. It's a little cleaner, and then let's get rid of those lines, and we're going to put up another one. And I think what I'm going to do, that color seems a little too bright. So we're going to change it to blue. Okay, so right here, if we look right in there, we have this breakout, right? So there's how I found it. Now I want to show you how I might look to trade it. And I want to remind everyone that all I can share is what I know. I can't share what CJ there looks for. I can't share what Larry or Ron or Karen does because I don't know. All I can share is what I do. I'm not at all suggesting what I do might be the way to do it. There are hundreds and hundreds of successful traders, thousands of successful traders. And how you might trade a breakout might be different from somebody else, but your goal, your goal is the same, and you may both cross that finish line at the same time. So how you get there might be a little bit different. So I'm just, like I said, all I can do is share mine. So here we have this breakout, and I am currently long this. I did not, I did. I sold half of it today. So now what I'm kind of looking for, and for somebody that may be looking to trade this, all right, is I think there's a high probability for most stocks when it pops up like that, you get a little consolidation. Now it may be just one day, the low might come down in here and then it can just start moving back up, but the low comes back into this candle. I personally think this happens 98% of the time. Therefore, I want to gear my trading that way. So what I'm looking for is a pullback, that pullback for an entry in here. Now, I'm not generally the type of trader that comes in here and just buys right away. Just buys. Usually, I'm looking for a multi-day pullback. So we have 1 day, 2 days. I start looking for that, and then I start looking for buyers to step in. Now, I see people say things sometimes that they may say things like, this is a buy at $7.99. And this is something I've never, ever been able to figure out, is how they know that. And they don't. It's not a buy at $7.99. It's a buy when buyers come back in. Way too many times have I seen somebody say this, $7.99, it's a buy. I've seen people buy it, and it just continues to come down. Well, how does that make you feel? And I'm not looking for an answer. I don't want an answer. I know how it makes you feel. It demoralizes you. It beats you up. It smacks you in the face. And that's because we just simply didn't have a good set of rules, a good set of just rules. When you back up a car, you look in your mirrors, you turn around, you have some rules. So trading should be no different. And what we want to wait for is that buy signal to come in, something that says buyers are coming in. That would be a pretty good candle that would suggest that. When we see that and we see, things like this right here, then that might be where we look to buy. So a lot of you have seen me put something called a buy box in there. So what I may do is put that box all the way down there. And what that does is it alerts my eyes. When I flip to this chart, I can see, I immediately know what I was thinking, and now I can go right to this and I can start watching that price action, looking for that entry. So that's just one. Let's see. When did you get into VG? Whoops, I took it off. It was, I have it right here. 116. 16. I thought it was on this because I just did a YouTube video and posted it out there, and I bought it right here on this candle, right there. Go back over here. Yeah, and that's another thing. If anyone wants to go check out the YouTube channel, you can certainly do that. And VG I posted on. Oh no. I'm sorry. I fibbed to you a little bit. Let's see. I bought it on this day right there. That would have been the 7th. Yeah. And I posted it on YouTube on the 6th. And then I bought it, and I don't exactly know what price. I bought it down here on this pullback, held it, and took half off today. So, all right, let me get back to this. So, so what we're looking for is another thing that I've heard people say is the chart, it popped up, and I've had people ask, have I missed the trade? No, you haven't. Have you, maybe they ask at $8.24. Well, yeah, you've missed it for today. Yes, I certainly wouldn't be buying it today. Absolutely not. Not at $8.24. But you've not missed the trade. The trade is the chart. And, you look at this chart, I want to ask myself, what can it do for me? I always want to ask that in a chart. And that's what I think VG can do for me, is come back up and hit these levels up here at about 965, 970. So no, you've not missed the trade. You've missed today's entry, perhaps, or the entry a few days ago, perhaps, but you haven't missed the trade. This is where we put the trade on a watch list, and what I'll do is I'll put it on one of those scanner windows. I have a scanner window that's my hot list. I'll put it on that scanner window, and when it alerts me that it's moving up, like one of these green arrows is what it would do, and then I would look at the chart, and if the chart meets some criteria, then I might place that entry in there. And it might be, it could be tomorrow. It could be, let's see here. There we go. We move down. It could be tomorrow, could be the next day. We could have 2 days down, and then all of a sudden we have that bullish candle that says, all right, buyers are starting to buy. It's not a guarantee that it's going to be down there, or that's where the turnaround is. But I certainly want to be where other buyers are. I don't want to, I never want to be the guy making it go up, or I never want to show my hand out there to all the millions of traders that this is moving up. I want someone else to do this, or it takes more than one person. But I want the group of people there, and then I'll just kind of tag along right beside them and get on there. Thanks, Trader X. Blue is one here. Look at blue. Blue's a rounded bottom breakout. This is another one. And blue, again, was coming up on the RBB chart. And I want to be alerted when, here, I'm going to leave that there and put that up. I want to be alerted when we're not necessarily always on the breakout, but very close to the breakout. And that's what that's how some things alert me right here. And there we are. We are very close to that breakout. So it's alerting me that it's a rounded bottom breakout. And then it's alerting me that price is just pushing on that door of breaking out. So now I can make that choice of buying before the breakout or buy after the breakout. So what we might look for is that let it break out here. Let's put a bullish candle in there. There we go. We'll put that bullish candle in there. And maybe it's one candle, maybe it's 4 candles before it actually breaks out. Then what we're going to shop for is a little consolidation. And then we're going to start looking for that those candle signals to start buying. So that tonight when we said we're going to look at breakouts, that's just what we're doing. And I'm trying to show, one, how I find them, two, how I might look at to buy them. CGC, that's a popular one here lately. Now I've closed mine completely out today. I took a piece off half yesterday and finished it out today. Closed it out, and you can see it's an RBB. And anyone that knows the RBB rules, you can see why I closed it out. That's went right up to where it should go. Pulled that profit off the table. Now, after this breakout, and here's right there. Here we are breaking out. So we broke out. You can see where it could have been bought intraday. Now, somebody that's just buying it today, you might still be holding it. But where I bought it was, by the way, this is the day right here, December 31. Yeah, December 31 is when there was a YouTube video on it. I bought it this day right here, held it these days, and then yesterday it made some money. Today we closed it out about 80% in the books. Now, what I'll do is simply wait for some consolidation, a little rest, looking for that chart pattern. A very typical chart pattern I look for is that J hook or that continuation pattern, which is nothing more than almost near or a breakout. See, that's almost near, or I wait for the breakout. So we've been talking about something in the trading room, SPT, see it, plan it, trade it. And that's all breakouts are about. Let me find a different one. Somebody in the room pointed out pins today, P-I-N-S. Man, that's a beaut. That is a beaut. And that's what I call a breakout. We have a breakout here. It's a rounded bottom breakout to start with. It's that rounded bottom breakout strategy. So we've broken out over this little resistance area, or part of the bottoming construction is more what I consider this. We broke out, and see that breakout right there. It could have been bought on the breakout. It could have been bought as we pulled back near the breakout support area. And that's right there at that 1934. Those that bought it in here were rewarded extremely well today. I'm not in it. Rewarded extremely well. Again, if somebody was to ask, did I miss the trade? My answer is no, you did not. Now, I would not buy it at 21.50 up here. No. I think for this particular move right here, yes, you missed that. But have you missed the trade? No. So now that we've broken out, here's where I'm going to put that buy box up there. Now I'm going to wait something that looks just like this chart pattern right there. So if we come over here and we take this, I'm looking for that, and let me change the color. That's what we have right there. Then I'm looking for that pullback. That's what I'm looking for right there. And then I'm looking for, buyers. That's what started right there. So this exact chart pattern is exactly what I'm looking for. The same thing. Over and over and over. Same chart pattern. Now, I wish that it was just like that. I truly do. Unfortunately, it's not. Sometimes it's sloppier. Sometimes you've got to really look to see the chart pattern. I mean, it might be, this pullback right here could be pretty kind of crazy in there sometimes. So there we have the breakout. Here's a trade that I'll be shopping for over the next 10, 15, 20 days maybe. I don't know. There's no way to know when it will meet my criteria to get back in. One thing I won't do, and it's just not in my nature. It's not in my trading nature. Is if it started moving tomorrow, just started jamming up, that is not a trade I personally take. I don't look for that type of trade. I look for trades that move up and pull back. They don't all have to be big movers like this. All right, I've got some questions here I better get to. Are these option trades? JM, great question. They can be option trades. They can be straight stock trades. They can be whatever you want them to be. And I've had somebody ask me that on YouTube earlier, and I answered it today. When I trade, for the past 2 years, I've traded nothing but options, okay? Simple directional options. So am I going to trade an option? Yes, I am. Does it have to be traded option? Absolutely not. So you don't have to trade options to trade this. And if you want to trade this option with an option, you just simply have to make sure it qualifies for your option rules. And I don't know how complicated yours are. Mine are pretty doggone simple. Just simple, is delta right? Is the open interest right? There you go. I'm in it with an option. But for those that can't trade an option, it's just a simple stock trade. Okay, let's see. CGC, what moving averages did CGG... I'm not sure what you're saying here, Bob. Touch the dotted deuce up here. I think maybe that's what you're... the weighted 200 is what that is. There you go. Yeah. That's one of my rounded bottom breakout rules. When we get there, take some off the table. In lieu of that 15-minute chart on the market, in the lieu that I was up 80%, hey, that's enough for me to take off the table. Let's see, what is the red dashed line? Let's go to a different, so we're looking at a different chart. Here's one that Doug with Right Way Options pointed out to me today, that he traded this one today, and it's on my watch list to trade in the future. What the dotted red and green is, I call it the red-green line. Some people call it the trendicator, but I tend to call it the red-green line. And it's really just the 17 EMA. That's all this is. You can make it any moving average you want. I've just made it the 17 EMA. And what it does is I have no interest. Here's how I use it. I have no interest in being long down here. And, there was a day years ago where that would maybe get me long, and you can see what would have happened. I mean, years ago, I suffered like everybody else till I got smart. Well, kind of smart, I guess. One notch up from not so smart. How's that? So the only trade I'm looking for is it has to be green, which means it has to be over the 17 EMA. And then I'm looking for these little pullbacks like this. Since we're talking about breakouts, let's look at OSTK. So I'm going to put a line here. And we broke out here, but I'll take that. What I'm going to do is put a buy box. I'm going to actually drive the buy box down a little bit. So we start to see consolidation here, just like right here. See how we broke to the upside? And then we consolidated right here. Here we broke up to the upside. Now I'm looking for that consolidation right here. Okay, so Let's see. Harry's asking any Fibonacci level on a pullback. Harry, I don't particularly look at Fibonacci. I don't put it on my screens. There are times when I will, but I don't look for that. I find that fib lines are great. I have nothing against them, but when it really comes down to it, it's price that does the trick. Now, granted, price pulls back to 23.6, 38.2 a lot, pulls back that 50% level a lot, but it's still price that's going to get me in. And I try to keep my charts as simple as possible. And if I come in here and start, putting fib lines on, that sort of makes me feel like I'm on drugs a little bit. I don't want to be on drugs. So, and even if, even if price, I mean, if I see a stock moving down and then I see bulls stepping in right there. So what is that? The 38.2? Whether or not it's on the 38.2 doesn't matter, or the 23.6. I'll change the color here. Maybe the bulls step in right there. Whoops, right there. Whether it's on a fib line that is not part of my game plan. So, like I said, maybe that was a long way just to a simple answer of I just don't use fib lines that much. Let's see. How do we add? Tim, I'll tell you what. I've had a lot of people ask me that. Before the end of day Friday, I will have a YouTube video out on how to do it. Okay, how's that? Otherwise, we kind of chew up tonight. But I will make sure by Friday I have a video out on how to do it. Okay. Thank you. Thanks for pushing me. You're somebody. It's a few other people asked me too. So let's see. Mr. D. He bought some glue a few days ago, and it broke out level, but just slid. Well, let's see here. Bought some glue a few days ago at the breakout level. I guess you mean right here, right? At the breakout level, but it just slid after that. I exited both as per my nice. So here's something that I would look at. And this, again, I put a lot of weight in price action, a lot of weight. And I put a ton of weight on how candlesticks are formed and how they got there, okay? A ton of weight. So I look at this chart and I can see some really good things about it. I mean, we've got our trend here is nice. I like the idea that we've went up, back, and we broke out right there. I love that idea. That is a good chart pattern. But placement of some of this stuff is kind of important. And I'm not sure the placement is, I need to rephrase that. I also want to make sure that we have a chart pattern that is more of a continuation chart pattern. This is more of a reversal, and it's already up. And then I want to point out this candle right here. That candle and the fact we've been up 1, 2, 3, 4 days. So I'm just guessing that was either bought on what day is this? Let me move this down. Either bought here on the 6th or bought here on the 7th. And then, like you say, it started to move down. Well, I'm looking at this chart pattern. That's not really the chart pattern I'm looking for. This is broken out. It's been up 4 days. So what I really want this to do now is not so much, it's not so much this breakout right here I'm looking for, as much as I'm looking for now this run up and a slight pullback, and then I want to get in. So I would be looking for something like this. There's our run. Now I want that pullback because that's what we broke out of right there. So I want it to break out and test. One thing you're going to find that I don't do very often, right, wrong, or indifferent, one thing I don't do is I don't buy the early breakout. I would rather pay a little higher or buy it on the pullback. Always looking for that pullback. Always looking for, I'm not a coupon clipper in real life. I'm not. When trading stocks, I'm a coupon clipper. So I'm looking for that coupon. I'm looking for that run. I want the coupon. Give me the blue light special here. And this would be paying retail up here. So that's the only thing I can see. Nice job on your stop. 2 thumbs up. Let's see, where am I? Oh, Rick, if RBB has not set up yet, but volatility stop has been green dot steadily set up, so would you wait for the trade? You've got to decide what you want to do. Are you trading? I mean, you're trying to pit the RBB setup with the volatility stop. So let's come over here and let's take this stock right here and let's set the volatility stops in there. Let's do that. Get rid of all that. There's the volatility stops. So you're trying to pit the two against each other, it sounds like. Use them in conjunction. Is it an RBB setup? Yes. Yes, it is. Are you wanting the breakout or are you wanting to buy near the volatility stop? Those two things are not mutually common because the breakout is going to leave the volatility stop. So see how this broke out right here? The volatility stop is down here. These volatility stops aren't here yet on this breakout. They're not here yet. This breakout here, the end of the day, look where we are. Look where we were yesterday. Volatility stop, you always want to use yesterday's volatility stop. So look how far away we are. And which like I said, you're looking for two things there that might not go together so much. So for OSTK, for me personally, again, I'm going to wait for some consolidation. And as it consolidates, let's see here. These are volatility stops. So the volatility stop might start doing something like this, just like this is. So this is where I want to be. You see what you're trying to do? You're trying to, you know, we're talking about the breakout, remember that the rounded bottom breakout is a strategy. Inside that strategy is what you're going to look for. So you look for an entry, an exit maybe. So this is an RBB setup. We're going to wait for it to pull back and get closer to those volatility stops. Another way to trade this is if you want to trade that breakout. If you trade that breakout, the volatility stops are going to be down here. They're not going to be up here. I hope that made some sense. That was a good question. I hope that made sense. Be careful not to pit two very good, well, one good indicator and one good strategy. Don't make them fight each other. Use them together, and they're powerful, very, very powerful. Okay. The data deuce, Jamal, on the data deuce, what data source are you using on T3? It's the 200 front weighted 200 front weighted measured on the low is what it is. 200 front weighted measured on the low. Here I can let's see right here. So right there it is. Take a quick shot of this. 200, average type front weighted, average of the low. Let's see, volatility stop. We have to be careful here, folks. We're getting deep in the weeds on things that it's going to, and I'm leaving in 15 minutes. An hour is all I'm doing. So be careful. We're getting in the weeds here. Doug, if you're in here, you've got a YouTube video on the volatility stop, I think. If you have that handy, maybe you could throw that in there. Otherwise, I'll get something done and how to set it up. Okay. Sorry, Raj. I hope you understand. Thank you, Terry. Appreciate it. Let's see, Les. Do you go on different time frame to find entries? Les, great question. And I want to go on record right now saying that I think that is the worst thing anybody can do. I truly, truly, truly believe that is one of the worst things a trader can do. Now, with that said, let me break that down just a little bit. If you're a very successful trader, and by successful, I'm meaning successful right now. If you're making a living trading, that's how successful you have to be. Then you can play intraday. If you are just starting out in trading, if you are a struggling trader, if you have not met your goals in trading, I would suggest you stop using intraday charts. The answer is no, I don't. CGC, I did not use an intraday chart. This came close down to the 50-day simple moving average. I bought it there. I'm up. VG put in a nice morning. By the way, this is a pinball type setup, which, like I said, I can't go into that tonight. And I have videos out there on YouTube on that. I bought this, or I started watching it here, and I noticed this Morningstar type chart pattern closed up over the T line, but look at this chart pattern right here. This is what I'm looking at. Up, consolidate. I chose to buy it. Video on this day. I chose to buy it on this day. It walked sideways. Nothing about that is intraday. And then we were rewarded. Great question. And I want to go on record right now that I think intraday charts are killers of struggling and new traders. How's that for putting your foot down? Well, let's see. Kimberly asking, do you consider UNIT not really, no. I think I maybe see what you're looking at. That to me looks like great consolidation. So one thing I'm going to do is move this. First of all, I'm going to get over here and simplify the chart. And then I'm going to put it into a 2-day chart. And doesn't that kind of change the way things look? Look at a 3-day chart now. This chart's exciting to me. This is a great looking chart here on the 3-day. Now, on the daily chart, this also looks terrific to me. I'm looking at this chart. I just knew how it was going to look on the 2-day and 3-day. I've done it enough. I knew that. And that looks like a fabulous chart. To answer your question, no, I don't consider that up 3 days. It is up 3 days. What I'm looking for is if I'm going to buy this, then where would I not like it? And I think that is pretty clear. I wouldn't like it right there. So I'm going to come in here and look what my risk is. My risk is it'll be about 4% because I'll put my stop in here about that 785 area. So what I've got to ask myself is that too much risk? And if it is, then you can look at it and say, well, it's been up 3 days. We might need a pullback. But it's not up 3 days that I wouldn't go after. It's not up that much. So not only do we want to look at 3 days, but we also want to look at, well, how much is it up in 3 days? That's a nice looking chart, by the way. Thank you. Oh, Harry, when you say when buyers steps in after pullback, how do you see that buyers are back? The candlesticks, Harry. Do you see green volume up? No, I don't really watch volume. I look at candlesticks. Candlesticks is probably the greatest thing since sliced bread. Candlesticks, pictures are worth 1,000 words. A candlestick and a candlestick pattern is worth thousands and thousands of words. So when I see a chart pattern that has a high wick and then we have follow through to the downside, and then when I see price action start giving me bullish candlesticks near support, doesn't have to be like to the penny. So I'm just going to say near support, like this candle right here, it starts getting my interest. So I start looking at this and I might say, all right, I see this candle, then I might start buying it after this, using this candle as the candle said buyers are coming back in after this pullback. If I'm wrong, if this turns out to be some sort of fake out, by the way, which nobody really knows if it is or isn't, if it turns out to be a fake out, which I'm not usually buying this candle, I'm not usually buying this candle. I'm usually buying this candle, or this candle. So by doing that, we have a bottom established. Now we can place an entry in here that we're comfortable with as far as risk goes. And the risk on this particular chart is about that 4%. And that's okay for me, 4% risk. Good question. I hope that helped. Let's see. VRTX, 3 bars up, pullback near all-time high, trap a VRTX. Yeah, there you go. There's the breakout chart we're looking for. So, and I'm not looking at this, all right? That's not what I'm looking for. Here's what I'm looking at. This is part of the chart pattern I'm looking to make my play on, but what I'm looking at is this right there. I'm looking at this over here. We broke out. And you may be looking at the same thing. I get, in a week's time, I get an awful lot of questions. This is answering some of those questions. A lot of traders are focused way too far on the hard right edge. What I'm looking for is that breakout. We broke out. Now I'm looking for a reason to buy. So we break out, we pull back. Now I'm looking for a reason to buy. And that's exactly what this candle and this candle are doing. So I put an arrow on this candle too. That's because that low has been established and this low is higher. This seems, even by me just saying this, that seemed a little complicated, but it's not. It's really, really, really not. A rally up, a run, rally, whatever you want to call it, that breaks out over what? In this particular chart, it would be this line right there. We break out. This becomes the buy box right here. I'm willing to buy this anywhere in there. Let me reshape that. Actually, a little higher. I'm willing to buy it anywhere in that area. It doesn't matter to me whether this is a super nice chart, by the way. It doesn't matter to me whether I buy it right here or I buy it right here. I know that sounds strange, and I know that goes against what a lot of people have learned. I'm not saying what you've learned is wrong. I'm not saying that at all. I'm just trying to give a different approach to it. We spend so much time trying to pick a bottom. And look, I know that's what 95% of traders do. I see it every day. I talk to people every day, and they just can't bring their stomach to buy it up here. Believe me, I was that way. But you got to remember, we're trying to trade, we're trading moves up, right? So instead of focusing so much here, let's ask ourselves, what can this chart do for us? So to get more of this chart, there's a monthly chart. Wow. We're at all-time highs. So what can this chart do for us? It can be a $500 stock. There are no limits at this point. There is nothing to stop it. The sky is opened. So if this is just part of that trending chart pattern, what if the person here, this is the same thing. Here we are here. We break out. Here's our pullback. What if the traders in here said, this chart's cooked. It can't go higher. Well, look what it can do. So it's not cooked here. It can go higher. So what I'm looking for is that chart pattern let me highlight this again. We break out, we test, and I'm willing to buy anywhere in this area right here. And then manage my trade from that point. If I buy up here, this is not going to be my stop. That's way too far down there. This is now the new breakout level. So my stop would be in this level here. Good question. I hope that helped. Volatilities, thank you, Alan. Kimberly, Rick, we already did that. How do I really feel about intraday charts? I think they're a killer of new traders and struggling traders. And it's weird too. Do you know, and I have proved this talking to struggling traders, the more you struggle, the more you become frustrated with trading, the more you get into the intraday charts because you think tightening things up is going to help you, when it is truly just the opposite. It hurts you. If you open things up, it opens the doors. But it's human nature to curl up in the fetal position. You know, it's human nature to do that. You curl up, you tighten up, you get small. It's human nature to do that. Where with trading, you need to do that opposite. You need to open up, not collapse everything. Because all that does is it sets you up to get stopped out more. It doesn't help you find entries any better. It just helps you get stopped out more. And although when people say, put your protective stop on, that's a cool word or phrase to say. Fact is, you're losing money. And you don't want to do that. So if you, boy, we could get in the weeds on this one. If we open up rather than collapse, you get stopped out less. But you have to make good chart picks, and you have to have a good plan. And real quick, I want to mention you, because we're going to shut her down in about 5 minutes. And I'm not looking for anyone to say anything. But how many people are so sick and tired of hearing you say, plan your trade and trade your plan? We talked about this in the room today. I've talked about it in the past. Quite honestly, I'm sick and tired of hearing that. Unfortunately, it's a fact that you have to do. What happens, I think, is traders get wound up a little too tight in making all these rules, or thinking you have to have all these rules. And you don't. Let's just take this chart right here. I mean, this is a nice looking chart. It really is. So here's exactly what I would do. I would come in here, and we've gone up, we've moved sideways. Our green dots went red just a little bit, and now they're starting. My trade is not about this big area right here. My trade is not about from this low up. That's not what my trade's about. Now, believe me, I'm not saying that's wrong. In fact, I think that should be drawn that way. But I also think, and this is what I do more times than not, is I will, and there's people here in the room, you ask them, they'll tell you, this is what I'm looking at right here. You can draw this line, you can clearly see it. That helps, that confirms what you're thinking maybe. But this is what I'm looking for. So I'm going to draw that line up right there. And then what I'm going to do is draw a line across here, like this. And for fun, I want to mark this out too. I'm going to put a line there just so I can see that. Now, this becomes my buy area. If I buy in here, what's my risk? Down into here. Wow. If this is a biotech, it's surprisingly low for a biotech. But then again, I just noticed it's a $230 stock too. So my stop is less than 3% away. So my risk is 3% away. I ask myself, do I like this chart? Answer, yes or no. If the answer is no, I move on. If the answer is yes, okay, let's work it some more. So am I comfortable with a 3% stop? All right. I might buy it right in here. I might take that risk. There are other charts, and see, we're near a new breakout, and we've just now, 4 or 5 days ago, broke out over this high. So we broke out. Now I'm looking for that pullback. I got it. If I don't take it here, I might take it on the breakout here. A lot depends on the chart, maybe market conditions, things like that. But as a rule, I'm very happy taking it right in here. Thanks, whoever gave us this chart. That's a nice chart. Let's see here. Japanese rice traders. Yeah. I hope you will post a presentation. I do too, Greg. I hope so too. I'll post it. Thank you, Harry. Appreciate it. Okay. All right. Let's see here. A couple more. I don't like to trade breakouts above resistance. I like to trade breakouts, then pull back. Same here, Bob. Yeah. Is this recorded? Yes, this is recorded, and I'll get it loaded up tomorrow. Not tonight. Too late. Rick, how do you analyze intraday or at end of day? How do you? Oh, I see what you're asking now. I see. Say today, this stock right here, or here, let's, where's some of these I was looking at? Let me go to one of those. DAR, look at DAR. DAR is a beautiful trade. This was on the pick list yet today. And this was pointed out by one of our members, and I made a note of, they were pointed out yesterday, and I made a note of it to put it on the watch list today. I was kind of bummed that it actually broke out like it did. I was really hoping it would squat down just a little bit, but it didn't. Therefore, I did not take the trade. So the question is, how do you analyze this during the day? Well, if I'm looking at this chart, if I would have saw this chart, which I never saw it until it was too late in the day. In other words, somebody gave it to us, and it was toward the end of the day. But that would have been a buy right there. I have no intraday. I don't look at intraday charts, but I certainly look at buying stocks intraday based on the daily chart. So that would have been a buy to me. Today, if this chart would have hung around a little, there we go, a little lower, I would have been happy with it up a little bit, which I could have caught the low, but that's that type of trading that I think is BS, but that's just me. So inside that area right there, I would have loved for this chart to have been there today. That would have been a buy for me today. It might have been at 28.65. It might have been at 28.62. 26, excuse me. 28, anywhere in there. I don't nitpick an entry that much. I get it close, and then I trade the chart. When I look at a chart, again, as I said early on, there are hundreds and thousands of traders out there that make really good money at trading. Our goals are the same. Our finish line might be the same, but how we get there is very different. It's like the Olympics. You can have all these gold medals in these different sports. It doesn't matter what sport you're in, you got a gold medal. Trading is that way to me. So I'm just sharing how I get there. That's all I'm doing. And once I enter a trade, it's not about what this chart is necessarily doing. It's about me managing that trade. And there's some really great topics we could cover more about tonight. I hope that made sense, Harry. So like right now, this chart here, I missed it. I can't buy this today because it gapped up. I don't chase gaps. Not as a rule. So now what I need to see is I need to see this consolidate. And it doesn't have to consolidate very much. Pretty tight right in here. But I'm not going to chase a gap. That's just hard for me to do. That is just one of those things that I can't do. So how do I like Twitter? I'm actually long Twitter. Been long for a few days now, Twitter. And it's doing everything I want it to do at this point. Twitter is a rounded bottom breakout. I'm going to redo that. There we go. You can see from right there, we turn green. I'm going to draw a line up here. I'm going to put another line starting here, right there, across. You can see we've broken out. There's 3 bars up. I'm not going to buy up here. Why? We've been up 3 bars right here. I know people in the room that bought it today. I've been in it. I chose not to buy any more today. We'll just see how it acts. But right now, I am bullish on the chart, but I'm not convinced it's ready for a new buy. So I want to say that in a little bit different way here. Just because somebody says the chart's bullish does not mean it's a buy. Right there, I'm talking to those new traders or struggling traders that look for trade ideas. You hear somebody that might say that's a bullish chart, so you think you're going to go buy it when they didn't say it was a buy. They said it was a bullish chart. There's a big difference between the two. That is a bullish chart because it is a bullish trend, but it does not mean it's ready to be bought. So anyway, Mike, bottom line, right now I like Twitter. Okay, where are we? And then I've got to shut her down here. Okay, so I want to, I'm going to leave it with this right here. I'm going to write something up here. And this is something that I just started doing. See it, plan it, trade it. Simple as that. And you just saw how I planned out a trade. It does not have to be all fancy pants. It really does not. Take Z. Look at Z. What planning does anyone need to do there? If you're one of these people that dives into every intraday chart, then you're right. You're killing yourself, but if that's what you do, that's what you do. Look at that chart. That is a beaut. So what are we going to do with it? Well, looks like it's a buy to me. There's the buy box right there. It's doing everything we want. And here's how I would plan this out. I probably maybe could time it. So I'm just going to, there's our trend right there. I don't need any more than that. And I'm going to extend that up. And then we're going to put a line across this top because that's what we broke out of. Right there. There you go. And I'm going to put the buy box like this. And if there was any way possible for me to not put that corner in, I would. But there's no possible way for me to do that. So this area right here into here is all the buy area. There you go. There's my trade. What can it do for me? Let's go out long term. There we go. Let's go weekly chart. There we are. So what can this do for me? It can do that for me right there. That would be my trade on this, 8.5%. Now, I'm going to buy an option. If I buy an option, that 8.5% turns into 25, 30% maybe. And that's exactly how I would set a trade up right there. All right, ladies and gentlemen, I want to thank you very, 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 very much for being here. I'm going to put the video out, and I'll have it out tomorrow. If you rewatch the video, do me a favor. If you like the video about this area right down here, just about right here, you're going to see a little box, red box. It'll say subscribe. And if you would like to subscribe to our YouTube video, just click on that, and you're good to go. Again, I want to thank everybody for being here. I do appreciate it. And we'll see everybody tomorrow morning, bright and early, when the sun rises. You guys all take care.